record, and then we'll go to live stream. I think as soon as it goes through, anyway, I think we're going to be live in like 5 seconds, even though I've got to type in a few things.
Okay. You can hear me good, right?
You're perfect.
Okay.
How about me?
Yeah.
Okay. I figure we'll go 15, 20 minutes, give or take.
Yeah, that's fine. Whatever you want.
Depending on how the flow goes. Okay. All right. We're on live now, technically, so you can say hello to the audience.
How you doing, everybody? Good morning.
With Bob Vieira. With Universal Short Sales, LLC.
Yeah.
Okay. All righty. All right. Now we are. And I'm just going to start here in about 3 seconds. It's loading up, and you should be able to see the stream in the group on Facebook. There'll be a delay, but you should be able to see it. Good morning, everyone. Tom, the People Conductor Black here. I just wanted to let everyone know we are joined by our special guest, Bob Vieira, and he is the founder and managing partner of Universal Short Sales, LLC. And while serving clients as a licensed realtor, he realized there was a need for a knowledgeable company specializing in the short sales sector. Bob is an industry expert with a passion for guiding homeowners through the short sale process. Welcome, Bob, and good morning. How are you?
Thank you. Good morning. Good morning. I'm doing well. How are you?
Good. Couple of buzzwords we hear in real estate in general is, someone's delinquent on their mortgage, or notice of default, or they're underwater. What do some of those terms mean, and what is a short sale?
What a short sale is in a nutshell, it's when the lender, if you're a homeowner and you're defaulting on your mortgage, your lender will allow you to sell the property for less than what it's worth. So just to give you a random example, let's say your mortgage balance is $100,000, right? That's what you owe the bank.
Yeah.
But the property's only worth $70,000 for the sake of an example. In a short sale situation, your bank will let you sell for the 70 grand that it's worth. And then the rest of the money, typically you won't owe them, it gets wiped away clean. Right. And you're able to just walk away from the property, all the debts involved, and most importantly, avoid foreclosure.
Right.
It doesn't get recorded as a foreclosure, I should say.
Right. And because I'm familiar with real estate and the short sale process to a certain level, just real quick, can you touch on maybe the credit impact difference between a deed in lieu of foreclosure, a foreclosure, and a short sale? Why do a short sale when they could just give the keys back to the bank?
Sure. So when it comes to a deed in lieu, there's a couple issues there. First off, a lot of people think that it's as easy as just giving the keys back to the lender, as you said.
Right.
But a lot of times the lender is not going to want to do that, because the servicer and the investor on the loan looks as that is very, very risky. They get sued a lot when that happens. It depends on the exact terms of the loan. So it's a lot more complicated than it seems on the surface, just to do a deed in lieu and give the keys back.
Right.
Now, as far as the credit impacts, it's very similar. Doing a deed in lieu is very similar credit impact as if you were going to do a foreclosure. So that's the tricky part of it. But sometimes it makes sense. If you don't care about your credit, it makes sense.
Right. And to that point, I've heard if you have an FHA mortgage and you do a short sale and you get that wiped out and you know work on your credit, you could possibly get another FHA loan within a couple of years. Is that true?
Absolutely. And again, that's a case by case basis.
Sure.
But again, when the lender is evaluating you, let's say 3, 5, maybe 7 years down the line, they're going to
Right.
look at your record and say, okay, you had a short sale a couple of years ago, but it's a lot better than a foreclosure on your record.
Right. Right. Okay. And let me make sure I got this right. So to a future lender, if you have a foreclosure, they basically say, oh, this borrower just threw his hands up in the air. Now, I've understood that it could be 5 to 7 years after a foreclosure before you can buy again. Is that close to accurate, or obviously it's case by case?
Right. It's definitely case by case, but I would say 5 to 7 years is fair. And
Okay.
don't forget, it's not that cut and dry, because you have to keep up with your credit and you have to make sure, you don't get into any more financial difficulties within that 5 to 7 years. So.
Right. Got it. Got it. Now let's talk a little bit about universal short sales. I want to find out some basic outline of what you do, how you do it, how it could benefit the members of this group and anyone within my network that could use your services.
Right. So we're a nationally based company. We're based here out of Florida. I live in Delray Beach. I just moved here from Philadelphia with my wife a couple months ago, but
Okay.
we do process short sales throughout the entire nation. And how it would benefit members of this group is, for all the wholesalers and investors on most of the deals, the ideal transaction for a lot of these investors is equity, right? You need equity to make the deals happen. Whether you're a wholesaler looking to assign the deal, whether you're an investor looking to make a cash offer, a lot of times you need that equity, but a lot of times it's not there.
Mm-hmm.
So in the situations where you make a cash offer, you have a homeowner in distress, and there's not enough equity for you to make the deal work, instead of passing up on the deal, throwing it out, you could refer that deal to Universal Short Sales, and we'll sign a contract with your referral agreement. It's very, very straightforward. And once we process that transaction for the homeowner, we could help them do a short sale. We cut you a check immediately after closing. It's as easy as that.
Wow. Okay. And you can do short sales anywhere in the country, correct?
Correct. We have associations with lawyers throughout the nation, in case it's a complicated transaction where maybe there's credit issues, maybe we have to stop the auction date, if the auction date is within 37 days. But yes, we could process throughout the entire country.
Well, that brings me to another question, because as a matter of fact, have a homeowner that we spoke to the other day, and they've basically thrown in the towel. They do have an auction date. I have actually heard in the past where people have been able to get the auction stopped as late as a few days or weeks before the auction date. Is that true? Still true, or again, case by case?
You know what? It is true. It's possible, but it's very, very difficult.
Okay.
So the lenders and the servicers have to follow a 37-day guideline. So Tom, what that means is if the auction date is scheduled within 37 days of the date you're trying to do a short sale,
right,
you can't do a traditional short sale. So what that means is it's very difficult to list it with an agent as a short sale, process it the traditional way. However, if you're able to submit an offer and it meets that lender's appraisal price and it's a strong offer, you could definitely still get the deal done. You just have to move quick.
Okay.
I'll actually give you an example. We're actually working on one right now. You're making me think of it. It's in the Philadelphia market.
Sure.
Where the scheduled date was October 12th. So this thing was going to auction October 12th, and we literally submitted an offer. We were able to submit an offer 2 weeks ago, and it's going to closing. So we were able to get it done.
Wow. Okay. And uh, based on, so are you negotiating on, so I send you, take me through the process. I get a lead, I send it to you, we sign a referral agreement, I get that we're going to get paid at the end. That's awesome. When you start the process, and it comes to offer time or getting an offer in front of the lender, the servicer, whomever, who is providing the cash offer, and is it possible that someone who provides the lead could possibly make an offer?
Yes. So just to kind of back up with our process,
Sure.
the first thing we do is we reach out to the homeowner, introduce ourselves, and we want to qualify them. Because
Right.
remember, it has to be a qualified lead in order to do a short sale, or else we're wasting the homeowner's time, your time, our time. So we have about 3 to 4 qualifying questions. And if they meet that qualification, we then educate the homeowner on what a short sale is, how it works, and the positives and the negatives. And then there's no sales pitch, there's no, pressure tactics. We very simply say, look, this is what a short sale is. This is what it could do for you. Are you interested? Do you think it's the best fit for your financial situation?
Right.
If it is, then we just proceed with it. We'll sign a third-party authorization, which we'll then submit to the lender and begin to process it from there.
Okay. Fantastic. Now, one of the things that I know for a fact, I've done as an agent and investor, I've probably done about 30, 20 as the agent, maybe another 10 as a referral. I've
Right.
worked on referrals before where I sent them to someone similar to you, who handled the heavy lifting.
Right.
They put together something called a short sale package. Now, my understanding is it's basically explaining hardship letter, why it happened, financials. They need to review that you are in fact in trouble.
Mm-hmm.
What other pieces of the short sale package does a homeowner have to provide?
Mm-hmm. So speaking of the package, right, if it's an FHA loan, then the lender is required by law to take you through what's called a financial waterfall. So if it's an FHA loan that's defaulting, that short sale packet that you're talking about is going to be very extensive. You're going to have to provide 2 to 3 years of tax returns, 2 to 3 months of recent bank statements.
Sure.
You're going to have to provide a very detailed hardship letter, so
Right.
on and so forth. Now, if it's a conventional loan or a different type of loan that's not an FHA, then a lot of times, Tom, there's no financial waterfall required.
Okay.
So that packet that you're talking about is going to be less extensive.
All
so
right.
The owner may not have to provide, all of their financial information.
Okay.
And,
Okay.
it's not going to be that extensive.
Yeah, and it's funny because each lender, many banks and mortgage companies, they'll actually have their short sale package PDF or whatever on their website.
Right.
And so, and again, I would say, and this is, correct me if I'm wrong, do you have any idea on the numbers on short sales, like the percentage that are FHA versus conventional? I have to imagine they're much more FHA.
A lot of them are FHA. I don't have those numbers.
Okay.
I'd be very curious to know that as well.
Right.
But, we see a lot of FHA because they're just riskier loans. I mean, look at how much they're putting down. I mean, it's next to nothing. So they're very risky for the borrower.
Well, and that's the thing that we talk about. And I was reading something about it this morning, and as I think it was a couple of entertainers are investing in an app that's going to teach young people financial literacy. Wow. And that's one of the things that we haven't done. And you probably remember right before the bust, all these exotic loans and some, negative amortization. Every month that you made a payment, you owed more to the bank. What? and stated income. I have to tell this quick story if I could, but
Sure. Yeah. Please.
I had a friend of mine, and she's from Bolivia, and I put her in touch with a mortgage lender who pre-approved her based on her income for a $200,000 home. Well, she didn't want a $200,000 home. She wanted a more expensive home. So she talked to another Hispanic lender, and the lender put her into an 80-20 stated income loan for a house that was $365,000. And she had to have roommates to make her mortgage payment. And then ran into some financial difficulties. And she and her family have some land in Bolivia that she had to sell to keep her mortgage current. She has the house, but it's interest only. So she's not making any headway. She's making the same payment every month. And the reason I tell the story to you, Bob, is every person I sold a home to as a buyer's agent before the bust, with the exception of her, I made sure they got into a fixed rate mortgage. Nothing exotic, because we saw this happening. We were going up 20% a year in equity appreciation in Maryland for 2 years in a row. And I'm like, there's no way that could continue. And the old saying, what goes up must come down.
Yeah.
Tell us a little more. Maybe have a case study recently where, you did a short sale in Maryland or another place, and, give me the best case scenario as far as short sale timeline, and like what has been the most difficult short sale you've had to close.
Wow. Sure. The most difficult. That's a tough one.
Or a timeline, just the longest one, maybe.
Yeah. So one of them actually comes to mind. It was right outside the Philadelphia market, actually, again, which is a weird coincidence. So there was 2 lenders on it. Those are my favorite. And obviously being sarcastic, it was a nightmare. But so it was actually a learning curve for me, because up until that point, I've dealt with numerous short sales that had 2 lenders, but I've never dealt with a HUD. The second lender was a HUD loan. So I just approached it thinking, okay, it's just a typical secondary lender. We can make them an offer just to settle. Boy, was I wrong. It was an absolute nightmare. HUD's process, just for anyone who's listening, when you're doing a short sale with them, totally different from a typical lender. Totally different process. So it dragged out. It took us about 5 months. And this really should have been a 2-month short sale, 3 max to close it, Tom.
Right.
But it drug out 3 additional months. It took us 5 months to close just because of HUD's process. I had no clue what the heck I was doing, and I'm happy to admit that.
Yeah.
But we took notes, documented it, and now I have literally an operations manual strictly for dealing with HUD. That's how complex it is. But that was the most difficult one for sure.
Sure. And what about the fastest? I had mentioned to you, I had a situation. I just going to give you this quick example.
Yeah.
It was a seller in Pasadena. The house needed work, and they owed, I think, $210. We got an offer for, say, $195, so it wasn't a big discount.
Okay.
Retail buyer.
Cash offer? Okay,
retail buyer, believe it or not, and we had to do home inspection. They had to make a couple of minor repairs. We closed it in 45 days.
Wow. And
that included, the buyer getting their new mortgage and the seller getting out of their bad mortgage. But like I said, it was like right when everything was blowing up. It was right in the bubble. I don't even know if it had really just yet, but it was right there. And so that one went really smoothly. Can you think of one that took a few weeks or just maybe a month or so? I'm sure you've had those that have gone quickly. So is your process fairly quickly on average?
Very, very. I mean, we're way, way above the average.
Okay.
Our quickest one to date was 50 days. You have me beat at 45.
Okay. All right. Well, it was an aberration. That was 11 years ago.
Yeah,
Yeah.
no, but yeah, 50 days. We got the property listed with our real estate agent that we contracted, and they were able to get an offer within 2 to 3 days. And we
Right.
processed it quickly. There was one loan on it. Not a lot of back taxes, so it was straightforward. It was very
Sure.
straightforward.
Right. Now, speaking of other liens, now I understand that taxes are always primary liens,
Mhm.
correct?
Correct.
They always have to be paid first. What
At the point.
happens,
Correct.
right?
Yes.
Okay.
Yes.
And what happens in situations where you have second and third mortgages? Are they often or almost always wiped out completely in a short sale?
What'll typically happen is the primary mortgage lender will make a settlement offer. It's as easy as that. So, let's say I'm the primary lender at 123 Main Street. I have a secured position, and you're the secondary lender, Tom. What I would do simply is, okay, the short sale offer comes in. I'll say, okay, yeah, I'll settle for 80 grand, but Tom's balance is 20 grand. I'm not paying him 20 grand. I'll offer him 6. Let me know what he says. I mean, it's pretty straightforward.
Okay. And those numbers I've seen them, offer 1,000, 2,000, just token amounts, because my understanding is technically they could wipe them out altogether and give them nothing.
Correct.
Okay.
So if you're the secondary lender, in my opinion, take what the heck they give you, because like
Okay.
you said, it's that or nothing.
Right. Right. Now, with your company, if I get a lead tomorrow and it's a homeowner, do you have a questionnaire? You said you have some qualifying questions.
Yeah.
You want me just to hand it over to you when we do the referral and you just run with it? Or do you want any of us to kind of help with the process and information gathering?
Yeah. So it's our goal. Our number one goal as a company when we're serving people is to make the process as easy as possible for everyone involved. So
Right.
if you get a lead tomorrow and it can't work for you and it may be a good short sale, just the slight inclination that the fact it can be a short sale is
Right.
enough info for you to send it over. We don't expect the wholesaler or the investor to, go through a questionnaire, qualifying
Okay.
questions. Just shoot it over, and
So,
we'll just take care of all that.
so
Yep,
instead of throwing the lead away, they throw it to you, and
exactly.
it'll turn into money, hopefully within
Hopefully, yeah, and then
a
we'll
couple
keep
of
you
months.
updated. Yep, exactly.
Okay. And again, we always know it's case by case, but would you say most short sales that aren't too ugly close within 90 days, give or take?
That's a very difficult question.
Okay.
So we could get
I'm not going
we
to
could
hold you
get
to
it.
it.
Yeah, well, it's just unfair. I feel like a lot of people do, hardcore sales pitches and, I could close in X amount of time and make guarantees.
Right.
Well, really, that's unfair for the seller because the property has to get sold. So my company can get the short sale ready to go, let's say within 30 days, short
Sure.
sale pack filled out, hardship, everything's good to go. But
Right.
the property might sit for 5 months.
Right.
That's something that's
Yeah.
out of
Yeah.
our
I
control.
understand. I understand.
Yeah. So,
And I'm just thinking cradle to grave, A to Z.
right.
If they're all in order and they get everything that you need for the package, and at the right list price, the house is going to sell fairly quickly.
Mhm.
But yeah, I don't want to get fixated on timelines because there are so many variables here.
Yeah, a lot of variables.
And you had mentioned you were working as an agent. Are you still licensed in Florida?
Yep. So I'm licensed in the state of Pennsylvania.
Okay.
That's actually how I started. I
Right.
started hustling around as a new agent about 4 years ago in the Philadelphia market. Awesome market still. I love it. And I started just taking, like any new agent does, Tom, any listings that come my way.
Sure.
And a lot of them happen to be ugly short sales where I had no clue what I was doing.
Okay.
And then I just learned the hard way.
Yeah. And you did some self-education and
Yeah.
self-discovery and all those things
Yeah.
along the way.
Exactly.
How did you get teamed up with Universal? What happened there? And you said they're a national company, right?
Yeah, So, like I said, I started listing a lot of short sales, then I had other realtors and other investors reaching out to me saying, hey, this short sale is terrible. I hate this. I don't want to deal with it. Take it off my hands. So I did that for 4 years. And at the beginning of this year, I actually founded the company, Universal Short Sales, because, you know, there's a problem and there's a need in the real estate industry for a good short sale company. And I realized that.
Right. Well, and that's really a great tool. I think I've told you before, I have a number of Facebook pages and Facebook groups that I run.
Yeah.
And people are always looking for good people that they can do business with. And so going forward, I really want to make sure that anyone that's a member of this group and any other group, you know, they can reach out to you. I'm going to post this after, but I do have a few people on right now. Bob, what is your email address? I'm going to jot this down.
My email address is Vieira, which is my last name. So that's V as in Victor, I-E-I-R-A.
Okay.
Then the word companies, plural. So COMPANIES.
Got it.
@gmail.com.
Okay. That's really easy. I'll post it in the comments as well. As a matter of fact, I'm going to switch over to the page and do that right now.
Awesome.
Let's see here. Vieira Companies @gmail. Okay. And what else can you tell me about the short sale process that we may not know as investors and real estate agents?
As an investor coming into it, the most important part that's often overlooked is the BPO process from the lender.
Okay.
It's very important.
What is a BPO?
So a BPO is short for broker price opinion. And that's when, so that's the end all be all of whether or not the lender is going to accept your offer as an investor. So a lot of investors think, Tom, that, you know, if they're unfamiliar with short sales, that they're going to make an offer to the lender and then hop on the phone with someone from the bank and do this crazy back and forth negotiation and use their skills. But it just doesn't work like that.
Right.
The way it works is the lender doesn't care. They don't want to sit on the phone and go back and forth and haggle with you over a price. They probably don't know the market. So what they're going to do is you offer $100,000 for the property. They're going to order a third party BPO, broker price opinion.
Right.
And, you know, if that comes back at 90,000, let's say, that's what they're probably going to counter you at, 90,000.
Okay. Okay.
So that's very important. Handling that process is super important.
Right. Now, I've heard this a couple of different ways. I'm not an attorney. I don't know the answer to this question.
Right.
Okay. Some agents show up at the property helping the BPO appraiser.
Yeah.
Illegal, unethical, wrong, right, or gray. What is the answer to that?
I'm going to give a disclosure too. I'm not an attorney either.
Okay.
And here's what I have to say about it. If you're the buyer, okay, here's where it gets hairy. If you're the buyer and you're making an offer on the property, do not show up to the appraisal.
Okay.
That will be considered because it has to be an arm's length transaction, and that's clearly not arm's length.
Yeah.
Now, if you have the listing agent, if you're the listing agent, I think you should 100% show up to that appraisal.
Okay.
And you're not necessarily like influencing anything or committing fraud and lying about anything, but it's very important that you're pointing out the defects of the property. It's very important you're meeting with the appraiser, telling him the story of why you came up with this price, so on and so forth.
Yeah.
So that's okay if you're the listing agent. Yeah,
that makes perfect sense. And the thing is that everybody talks about different things. We've heard different things along the way.
Yeah.
One of the things that I wanted to ask you, because they had waived deficiency judgments for a long time, and then they talked about reinstating the 1099-C. So can you explain the deficiency judgment, 1099-C, and what happens in today's short sale environment? What happens?
Sure. So regarding deficiency judgments, and that's actually excellent. It's an excellent point to bring up. So when you're working on behalf of the seller, right, like we typically are, the first thing we look for when we receive a short sale approval letter,
right,
is the lender waiving their deficiency judgment.
Correct.
The deficiency judgment is, in layman's terms, is whether or not the lender has the right to come back for the proceeds that they're losing on the sale.
Right.
So a lot of people, what happens, and this is devastating when this happens, the lender, the buyer makes an offer for $100,000. The lender issues an approval letter saying, congratulations, we accept your offer of $100,000, and they issue that to the seller. Seller gets excited, agent gets excited, yes, we did it. But nobody reads the details. You have to make sure that on that approval letter, the lender is waiving their right for those funds. If it's not on there, what we do personally is say, nope, we need you to put that verbiage in or else you don't have a deal.
Okay. Because back in the day, some of them that I did, they wanted payments for a short period of time, just kind of like, hey, we're waiving $30,000. We'd like you to pay us $300 a month for a year. Like a settlement, like a payout settlement. And that happened in a couple of cases. But you try and wipe them all out. And then what is a 1099-C? We've heard that before in reference to deficiency judgments.
Yeah. So what that is, and I'm not an accountant, so I don't want to elaborate too much on it, but that's essentially the document that there's tax implications with a short sale. So that just lays out the tax implications and what you're going to have to, you're going to have to pay taxes on the funds that the lender is taking a loss.
Right.
That's essentially what it is.
Okay. Gotcha. Well, I will say
regarding the payment plans, Tom, actually, so sorry, go ahead.
No, you go ahead. We're good.
Yeah. What I wanted to say, I wanted to touch on that because that's another good point. We do see that quite often still. And that happens a lot when the lender sees that the borrower has a job and they'll calculate the monthly income from that job. So if they see you're a borrower doing a short sale and you're making a little bit of money, they may come back and say, hey, pay us, like you said, $300, $500 a month. Usually we push back against that.
Okay.
And sometimes we can get it lowered. Sometimes we can get it wiped out. It really depends. But that does happen.
Okay. Gotcha. Because they, like I said, I had heard a number of times over the years that they were going to bring the deficiency judgment back and reinstitute it on a more broad scale. And then they kept just moving back the date. And I think it's a PR nightmare for the bank.
Yeah.
You got a multi-trillion or multi-billion-dollar bank, and they want to squeeze me for my $20,000, and it's just, especially Wells Fargo. I mean, they've got their own challenges with banking in general, but there are like countrywide, Wells Fargo, Wachovia, there's PennyMac. I mean, there are so many different companies that went under, shady stuff, robo signings, all of that. For me, and maybe you can tell me this. This is an interesting question. Just out of curiosity, what's the longest that you have experienced where someone was in a property without making a payment? And I'll tell you mine. You go.
Wow. Let me think. 10 months.
Really?
Yep, 10 months. And here's how that happens. People play the system. Some people are very, very smart. They understand how to play the system. So they'll file bankruptcy. That'll protect them. And then once they get out of bankruptcy protection, then they'll, maybe try to do a loan modification.
Right.
The loan modification process takes a long time. They drag that out. And then once they get denied, then they wait even more, then decide they want to do the short sale. So
Right.
people are smart. They know how to drag it out. What was
Okay.
yours? Now you have
Well,
me curious.
here's a guy. It was a lead that I got through direct mail. This is probably 4 or 5 years ago. And I talked to the guy on the phone. He had since moved out of the property, so it was empty when we spoke. He said, Tom, I haven't made a mortgage payment in 5 years. And they still had not foreclosed yet. Can you hear me? Oh, shoot. I think I set it up for.